Hi student, good day. I hope you are doing well. Today we are starting with the chapter 4 of financial accounting, which is regarding recording transaction and events. Let's start. During this lecture, student, I will provide you a pass card as well, the snapshot of pass card, which will help you to memorize and revise your chapter in quick manner. So let's proceed with this chapter, which will help us to understand the record, the cash and credit transaction, how to record in previous chapter. Already we start working on it, but we will go in further details. Record petty cash expenses transaction. So what is the petty cash? Petty cash means is just one is a general expenses. If we purchase the air conditioner, that is a specific for air conditioner, maybe go in capital, in assets, in the we buy a vehicle. But small payments like photocopy expenses, like some traveling expenses, small expenses which are petty type, which we cannot create for each expense any head of account. We put it under petty cash, and we just name it all expenses, small expenses over there, and then we make a record and transaction record as it is. Record of sales and purchase transaction. Understand the record sale tax on transaction, how the sale tax is booked. Sometime if you buy some item, it is inclusive of sale tax, we will see, or if it is exclusive of sale tax, we will see how it is recorded and how it is calculated. Very easy, but be attentive. Understand and record discount allowed and received. So this is also all these topics are important for your revision point of view, and your multi-choice question are coming on this area very frequently. So overview, update ledger accounts and the sale, purchase returns, trade and settlement discount and sale tax. We will be going through all this area. So go through this one. And regarding cash transaction, how the cash transactions are recorded. As we discuss, cash transaction recorded where the payment is made and received immediately. So if it is a payment is expense, we just put expense, or we credit the cash. Or if it is inside coming, cash is coming to us, then we debit the cash, or like this we see. Credit transaction on the other hand occur when goods are sold or purchased and paid at the later date, increasingly or more commonly. So for sake of simplicity, following illustration which we just discussed now, how it is recorded in the books of accounts. General ledger we'll see. So general ledger transaction for how the Kamran paid 80 for rent by check. So rent is his rent is expense. So 80 paid through a check. He paid through a check, mean a bank. Whenever you see a check, it's mean it's a bank. So expense always in previous chapter we revise it again. All expenses will be debit. So debit rental expenses and credit cash at bank. So it is already it is credit cash at bank, means it will take out cash from the bank account. And then Kamran sold goods for 230, which was the bank immediately. Sale always credit. So sale is the credit always. This is the credit over there, and debit is the cash, because the cash is coming into your bank account, in your books of accounts. And then a third number, so saying Kamran then purchase 70 of goods and resale using immediate bank transfer. Okay, so this again is a debit is the expenses and credit is the cash, because it's paying through the bank account. Kamran sold more goods, $3,400, and customer paying by check. Mean always sale is a credit and debit is your bank. Bank is a debit and the cash is an. These are the easy things for your understanding, but don't worry, in examination little bit complex things will come. These are the T accounts for the bank account and the sale transaction. Two items were sold and sale transaction showing in the credit, and then the rent is a cash at bank and the purchases was paid. So these T account you have to practice more for your learnings. For those students who are interested for one-to-one sessions, they can contact me on WhatsApp. So we'll definitely give them guidelines. and we have one-to-one session. But for other things, for routine things, I am uploading all free of charge these courses for revision kit and exam question, practice, pass card, everything I will provide to the students. Record transaction, credit transaction, how this records is made. Credit sales and purchases are transaction occur when goods or services change hands immediately, but payment is not received until future date. This is the meaning of a credit transaction. If you pay something and but cash is not going out, it's maybe after 30 days or 60 days, then how this transaction will take place. Cash and petty cash transactions. So some though not all accounting software package and then bank. This is recording the bank transaction is already we have discussed. A transaction that passed through the bank account need to be included in the general ledger. This achieved by obtaining extracting transaction from the bank, like a T account, which just now we have seen above table. This is an illustration they have mentioned. The following is a bank payment report showing the payment from the bank account. So supporting the, this is a mid-share bank. So payment report is there, payable, wages, rent, and all these expenses were made. So these expenses detail is there, and what is required then? What is accounting entries required based upon the bank payment listing? So this is then they have provided a solution for the ledgers. So how the debit and credit will take place. You student, you just go through up and downwards. So you will see all the debit and credit in the same manner how we have gone through. Now this illustration taking place for the credit receipts point of view, and then how this is the cash at bank is debit and credit transactions are happening. If you need a clarification, just message me or WhatsApp me. I will get back to you on the further clarification. But this is easy through. Regarding petty cash transaction, just go through petty cash. Like here, they said pet taxi fare for employee to attend a local meeting, a business record. This is small reading cash receipts. This some computer software expenses paid, or this all these expenses are booked in the books of account. The under the petty head. Petty cash receipts and payment. Week ending so and so record the following transaction with the supporting analysis. Receipt from the bank, from the bank account they receive 75 and pay for petty payments. So what are the payment? Tea and coffee, cleaning material, rail fare and postage. $61 was paid and 75 was in hand. But what will be the balance? Mean to say $14 will balance for their which will carry forward. This is the petty cash payment register, how it is debit and credit takes place. Recording sales and purchase transaction. Just go through student sales and purchase transaction, how it is booked. Recording sales and purchase transaction and returns. So sales, a debit receivable, credit sales, it's a credit transaction when you make a credit, and when you take a cash is coming in the bank and sales is credit. In both scenario, sale will be credit. But purchases also, both scenario, purchases will credit, debit, and then credit will be payable if it is on a credit, and if it is a cash, then credit will be cash at bank. But the rule will be same. Sale always credit, purchase always debit. This is the rule. So these students, we will do these all these type of MCQs question in our revision practice. So, but please you study by heart. It will help you for making your foundation. Principle of sales tax and accounting entries for sales tax. This is the easy part. Just go through the particular sale tax and how it is treated. They have mentioned according to UK point of view, UK taxation point of view. They have explained over here. The pro forma is a 20% sale tax, 17. These are the different slabs, and net selling price exclusive. You have to focus on this word. Tax exclusive and tax inclusive. Tax inclusive mean tax is included in the transaction. Tax exclusive mean tax is separate from this transaction. Net selling price is the amount that business will recognize as a sales income. The gross selling price is the price charged to customer. The difference between gross and selling price is collected from the on behalf of the tax authorities which they deposit in their bank's account. How it is treated and calculated, we will discuss in next page. See, so here they say Ali at a tax inclusive price 470 and less at tax exclusive price is 700. So what is required? How much sale tax is BAS collecting on behalf of tax authority if tax rate slab is a 17.5. If 17.5 is a tax slab, and how much is the tax is they are collecting Ali is a tax inclusive price. So sale tax can be calculated using the relevant percentage formula and then in which is the price inclusive or exclusive. Sales to Ali prices tax inclusive. Is tax is when tax is inclusive, then whatever tax amount you will add up with the 100 plus 100. So 17.5 divided by 117.5. If it is inclusive, then multiply with the 470. So you will multiply with this one and you will get the $70 is the tax which is included in this figure. And then sell tax exclusive. If tax is exclusive, then is a simple method. You just calculate straight away 17.5 of 700. So you will get $122 is the tax. The total tax to the collected from the customers, these two amount, and they will deposit into the tax sale tax authorities account. Accounting for sale tax, how it is accounted? Purchases excluding tax, net cost, sales is a debit, sale tax, and then payable or at bank is a sale tax account is a credited. So two amounts are figures will be debited and one is a credited with the full amount. So recording transaction for sale tax charge, this is the way how the output tax is recorded. Debit, credit, and then credit is a sale tax. Total key points you just go through. Payment of output tax on sale tax. How the output tax is recorded in the books of accounts. How discounts are taken into consideration? Trade discounts. Sometime a customer gave a discount on trade if they buy a bulk item. So buy over 1,000 units of product, the supplier may reduce the unit price by 5%. The account for trade discount, how it is recorded in the books of accounts. Settlement discounts are also there. How this is if they make an early settlement and they give a discount, extra discount. Discount received payable to reduce the total liability due to suppliers. Credit discount received and cash credit cash at bank. How it is recorded in their books of accounts. Students go through this one examination question while dealing with the transaction from the perspective of seller. It will state it whether or not the credit customer is expected. So just go through this paragraph. It is your exam point of view. They have highlight some area. Settlement discount. This is example they have clearly mentioned. You will clear this in your next slide. This is how the transaction will take place. list price and how the amount of customer need to settle. Purchase perspective, how the purchase perspective they will keep in their books of accounts. Settlement discount, purchaser perspective. Add the sold goods to Brazil. On credit for 200 BAS was offered 3% settlement discount for settlement within 10 days of invoice date. How should this accounted for in BAS book, and how in the goods for the purchase? How it is accounted for? 200 is the purchase price at the credit, and they offer 3% discount. See, debit purchases, credit payables 200, and then they will, if invoice was paid after early settlement, the full amount would be payable to the supplier within the recorded follow up payment. And if they just getting the discount of their, then it will be debit payables will be there, and credit cash at bank, and 3% cash discount which receives $6 will be there for their amount which they will be getting. The same way you do this understanding question. This is the chapter summary for updating ledger and how this is sale tax transaction takes place and trade settlement discount. Very easy bit, but student, you need to practice. This is the initial stages of your learnings. So hopefully you will get through, and you have any question, let me know, and keep watching. Subscribe this channel. We'll updating all chapters, and we'll update the revision kit also. And the pass card, now let's show you a pass card for this same chapter which we have done so far. This is a pass card for steps for accounting treatment, how the accounting stages, transaction and journals, purchases, purchase return, receipt into bank, how the payments are received. This is the format table, payments from the bank account, discounts, how discount, settlement, cash discount. You need to memorize this sale tax, these type of questions. Now be ready. The questions are coming in this area. So we'll see. Let's see now in the next chapter. Okay, student, thank you. See you in the next chapter.